David, good to have you back.
My former boss, by the way.
Your former boss.
I gave her start.
Yeah, he did. I am here today.
A wise man you
that
are.
man right there.
A wise man you are.
He's the best of the best.
So I asked Steve yesterday, if everybody knows what the Fed intends, and the Fed knows what the Fed intends to do, why don't they do it at this meeting? What is holding them back from just going ahead and ending the quantitative easing and raising by a quarter point? Why not?
I think it's a great question. They only have $30 billion more to buy in part of the quantitative easing thing. And I suspect there's a good argument for why don't they just say at this meeting, we're not going to buy any more. But they've been so focused on not surprising the market, so worried about repeating the taper tantrum, that they seem to have a commitment not to surprise the market. I think on the rate hikes, the issue is, yes, they probably have in mind 3 or 4 rate hikes over the next 12 months, but there is a lot of uncertainty. What's going to happen to inflation? Will Omicron persist, make supply chain problems worse? Will it cut into demand? And of course, they have to worry, are we going to have some kind of war in Ukraine? So they don't see any reason to commit. They're going to move slowly. Powell has to assure everybody he's on the inflation case. He's on the defensive because it looks like they're behind the curve, but he doesn't want to lock himself in.
Yeah, so that's very interesting. If you wait another meeting, you get into mid-March, which we're all, sort of looking forward to as the action meeting here. What more data will the Fed have, and how do you think they factor in the threat of a war or an invasion of Ukraine?
So a couple more months, you got a couple more bits of data on the labor market. Is labor force participation rising again, which I doubt given what's happened to Omicron? Is the inflation rate coming down? They do, of course, have the option in March to raise interest rates by 50 basis points if they really feel like that's what they need to do. I think on the foreign policy stuff, it's down to the wire. No Fed is going to aggressively tighten into the middle of a war. So that's a last minute decision. I think they probably hope this will be resolved by the March meeting. I sure do. But there's no way to know, so there's no way to commit yourself now. I think one problem they have is they really need to wean the markets off of this forward guidance. They need to say we're data dependent, every meeting is live, and so forth, so they have flexibility. Having strong forward guidance makes sense when you have rates at zero and you're trying to prevent long rates from going up. But they're in a new phase now, and so somehow they have to wean the markets off of this certainty of forward guidance.
Very, very interesting. And David, what do you make of the fact, so on the one hand, a lot of people in the market we talk to say, look, if the market gets a lot worse and falls out of bed in the economy, the Fed's going to back off. Okay, fine. But the economy would have to get a lot worse. The unemployment rate is so low right now. Inflation's pretty high. Where do you think their reaction function is in terms of backing off on all this tightening?
I don't think the stock market is going to make a big difference unless, all this volatility starts to causes some strains in the financial system, which we haven't seen yet, or B, the stock and bond markets suggest that the economy is slowing more than they anticipate. So what would discourage them from 3 or 4 rate increases if the economy is really slowing precipitously? It doesn't seem to be likely, but our ability to forecast how the economy responds to the pandemic is very limited. One thing that's changed is when they were meeting at the end of the year last year, they assumed there'd be another big chunk of fiscal spending from Congress in the Build Back Better thing, more child tax credit extension. That's now in doubt. So that gives them a little bit more flexibility. They don't have to lean quite so much against this big spending spree in Congress.